Right. Good evening, everyone. My name is Ravi Ranjan. I will be the host for the evening, and I welcome all of you to this wonderful event by PropCatalyst, Outlook on the Commercial Real Estate post-COVID-19. How will the real estate market function? What are the changes going to be in the market? What are the new trends which are being developed? And what would be the demand and supply side of industry? These are some of the important and burning issues we have right now. And to discuss all of this, we have a panel for this wonderful event today. So let me quickly introduce the agenda for the day and how we are going to go through the entire conversation. But before I do that, I would also like to take this opportunity to introduce all of you to the control panel. So today we are using the webinar function of Zoom, which means that you would not be able to speak or share your video during the live broadcast is going on. You would only be able to ask your question using two features, which I'm going to explain to all of you right now. Number one is the Q&A board. So on your dashboard, you can see a Q&A option. You can put your questions here, and our team will go through all these questions and requests, and we'll try and take these questions during the conversation and also towards the Q&A. The second option is called Raise Hand. Now, Raise Hand is a feature which gives us this dashboard where we see people want to ask question. So once we announce that we are now going to take live question, at that point of time, you can raise your hand and we will be able to give you access to ask your questions live. These are the two ways. You also have the chat option, but as you understand, we have hundreds of people joining in, so it would not be possible and practical for us to go through each and every chat. So request you to kindly use the Q&A and raise hand option to ask your questions. Once again, I would take this opportunity to welcome all the panelists, and I would like to very quickly take this opportunity to introduce to our partners. We have a lot of partners who helped us organize this wonderful event. I would like to start with Venture Catalyst. Venture Catalyst is India's first integrated incubator supported by an angel network which provides investments of between 3 to 15 crores per startup. Venture Catalyst started in 2016. And so far, it has incubated and invested 350 crores into 90 startups. Venture Catalyst is present in 25 cities in India and 5 countries globally. Some of the popular investments include BharatPe, Kootloot, Home Capital, Beardo, Coinex, Superdaily, Find, and many more. In 2019, Venture Catalyst was also ranked amongst the top 10 seed investors globally. Thank you so much, Venture Catalyst, for being a partner. Next up, we have Theory 9. As the world grows smaller, travel has become an integral part of our lives. Whether it is for business or leisure, millennial travelers want the comfort of a homestay with the standards of a star hotel. Theory 9 recognized this need and offered its patrons located in the most convenient part of the city of Mumbai. Thank you so much, Theory 9. Next up, we have Walfort. Founded in 1994, Walfort Group is one of the leading institutional brokers in India. Walfort Group is also involved in real estate development across Mumbai and Raipur, with cumulative development of 10 million square feet of land area across 23 projects so far. We have with us our next partner, Shanti Group. Shanti Group's motto is defined by growth, which aptly captures the ever-evoking spirit of Shanti Group. They are among the top private sector business houses serving 50,000 homes with 15 megawatt power sector, which includes renewable energy, biomass power plant, windmill and solar, logistic hub and integrated cold chain, commodity trading, mining, oil and gas fields, real estate, fintech, healthcare, educational institutes, civil aviation and PVC pipes. Thank you so much to all our partners to join us for this wonderful event. We received more than 1,600 registrations for this event. And today we have with us hundreds of people joining in from across the country. So we are very sure that this is going to be a very, very exciting session from here. Without wasting any time, I would now like to introduce all of you to Mr. Aniket Ashok Bharadia, who's the co-founder of PropCatalyst. I would take a minute to introduce Aniket. Aniket has previously worked as a compliance and sales trader with Walfort Financial Services, where he overlooked the compliances as well as he was part of the sales team for their institutional equity desk. He also helped the company to get new empanelments. In his tenure, in the equity market, he has worked closely with some of the largest mutual funds, insurance companies, treasuries, HNIs, and corporate. He has also worked as a research analyst. Aniket is an alumnus of SP Jain School of Global MBA. Interestingly, Aniket is also an avid scuba diver, and he has done 50 plus dives across 15 countries. I would like to introduce Aniket and request Aniket to come and show a quick presentation about PropCatalyst. Thank you, Aniket.
Hi guys, hi, I'm Aniket Bharadia from PropCatalyst. Me and my colleague Arpit Parakh founded PropCatalyst around October. We two guys have been very interested in the real estate field and have always been an enthusiast in the real estate field. Can you guys hear me?
Yes, please go ahead.
Yes, sorry. So just wanted to share about PropCatalyst with you guys. To do that, I'm going to share a video with you guys first about PropCatalyst and what PropCatalyst does.
We all aspire to build wealth. Invest in assets offering higher returns and liquidate when required. While stocks and bonds leveraged with the help of online trading, a more valuable and stable asset class remained inaccessible. Commercial real estate's relative stability has made it increasingly attractive amidst other investment options like the volatile stock market. But due to strict entry barriers, it was difficult for people to reap its benefits. But now, with PropCatalyst, individuals like you can earn 10 to 15% of annual returns by investing in and owning Grade A commercial properties. Invest with confidence, knowing that each property is reviewed by a group of industry experts through a rigorous vetting process. With investments starting from just Rs 20 lakhs, you can own, earn monthly rentals, and sell anytime you like. And with our innovative online platform, you can research, compare, invest, and manage your investments all at one place. You can get access to investment cases for every property you own with their accurate valuations and historical returns. This is how PropCatalyst uses a unique combination of technology, due diligence, liquidity, maximum transparency, and ownership to unlock the doors of next-level investing. So, it's time to elevate your portfolio, shape your own success, and build wealth with PropCatalyst.com, where you can invest in million-dollar deals without writing million-dollar checks.
This video gives you an idea of what we do. I would like to share a brief presentation with you about the same. PropCatalyst is an online platform providing fractional opportunities in pre-leased, high-yielding institution-grade commercial real estate. In midst of all the volatile bond and stock market, commercial real estate has been one of the most stable asset class to invest in, but due to its high ticket sizes, it was never accessible to the masses. We at PropCatalyst have brought you a solution by providing fractional ownership into high-yielding premium commercial real estate. All our offerings are pre-leased to MNCs or renowned Indian corporates. A property is divided into fractions for investors to own. Each investor shares the ownership in the property based on the investment amount. This enables investors to own Grade A commercial real estate with smaller ticket sizes. It even mitigates risk by offering to diversify your portfolio and enables an individual to build passive income. The best part about owning such an asset is the chances of capital appreciation. Our specialist real estate team at PropCatalyst will search, identify, conduct due diligence, and list the property on our platform. Register on our online platform and get updated about the latest opportunities available. Be rest assured, we will only list those properties which will put your hard-earned money to best use. An investor can browse through the options and select. Then he can buy a fraction of the property and start earning monthly rentals immediately. Sell whenever you like and enjoy capital appreciations also associated to it. Our team will make sure the entire process is hassle-free for you and manage the entire legal documentation. rental collections and distribution, and managing tenants and properties, and etc. With our innovative online platform, investors can research, compare, invest, and manage their investments all at one place. Commercial real estate yields you better than FD and government bonds, with monthly cash flows, and the only one on the list that has a chance of capital appreciation. Our team has me, Aniket, Bharadia, and Arpit Parakh as the co-founders, with a dynamic team of advisors and promoters having a good balance in experience of real estate, compliances, and network. Our previous transactions and past experience of the promoters have just under a lakh square feet of area under management in 8 office spaces with some renowned tenants like L'Oreal, Saint Gobain, Innovate, etc. I would like to end my presentation with the best investor of the world, Mr. Warren Buffett's quote: "If you don't find a way to make money while you sleep, you will work until you die." Thank you.
Thank you so much, Aniket. That was very helpful. Thanks a lot. I would now like to take this opportunity to invite all the panelists and give a very quick introduction. First up, we have with us Mr. Dhaval Ajmera, an MBA in Finance from the Cardiff University. Mr. Dhaval Ajmera is currently the director of Neelkant Tech Park Private Limited and Ajmera Group of Companies. This young entrepreneur believes that education is a stepping stone to a successful career. He's also the promoter of the upcoming Ajmera Global School, which is one of its kind and aims to develop each child into well-balanced individual who has a thirst for knowledge. Welcome, Mr. Dhaval Ajmera. We are glad to have you at the event today. Next up, we have with us Mr. Ramesh Nair. Ramesh Nair is the CEO and country head of JLL India. He is responsible for the overall direction, strategy, and growth of the firm in India. Mr. Nair has a strong reputation for leading teams across JLL India's various business verticals and for focus on business growth and advancement of the team members that drive it. Welcome, Mr. Nair. We are glad to have you here with us. Next up, we have with us Mr. Karthik Rajaram. He works with Xanadu Realty, and Xanadu Realty is arguably Indian real estate's most unique and impactful business model, which is institutionalizing product to market for developers. The co-founder of Xanadu Group, Mr. Karthik Rajaram, has an engineering degree from University of Madras and also a postgraduate diploma from IIM Bangalore. Welcome, Mr. Rajaram. Next up, we have with us Dr. Ritesh Malik. Dr. Malik has many accolades to his credit. He's a doctor, entrepreneur, a startup mentor, angel investor, and a TEDx speaker. While in medical school, he developed a keen interest in entrepreneurship. He studied marketing and management and graduated from the London School of Economics and Harvard Business School. He has been featured under the Fortune 40 Under 40 and Forbes Under 30 list. With his latest venture, Innovate, he aims to encourage product-based startups to be a part of the ecosystem. Welcome, Ritesh. We are glad to have you with us. Next up, we have Mr. Ankussh Ahuja. Ankussh is reckoned as reputable thought and action-oriented leader with proven success in real estate and financial services domain. He's acknowledged as a key contributor in institutionalizing the residential and commercial brokerage industry in India. His leadership competence dives across real estate and financial services, having worked with leading fund management, real estate, foreign exchange, wealth management, banks, brokerages, telesales, mutual fund, and life insurance organization. Welcome, Mr. Ankussh Ahuja. Next up, we have with us Mr. Neeraj Bansal. Neeraj has over 18 years of experience, and he is closely networked with his counterparts in member firms, having worked with multiple geographies, including the US, UK, Qatar, Dubai, Poland, Turkey, and Singapore. He's a regular speaker at national and international real estate and construction conferences and seminars, and he regularly contributes articles in several newspapers, business magazines, and television shows. We welcome all the panelists to this wonderful event today by PropCatalyst. And now I would like to introduce all of you to the session moderator, Mr. Anuj Golecha. Anuj is a qualified chartered accountant and started his career as a second-generation partner of Bansi Jain and Associates, a 4-decade-old CA firm managing over 1,300 clients. Anuj is an active angel investor himself and he's also the co-founder at Venture Catalyst. Anuj Golecha is one of the top 10 prolific angel investors in India, rated by VC Circle, and he's a seasoned financial advisor with experience of over 15 years. He has invested in 80 plus startups. Fintech and financial services has been core area of focus for Anuj over the last few years. Anuj has also been awarded 40 under 40 alternate investment professionals in India. He's a chartered accountant and an entrepreneur and investor by choice. Anuj, we welcome you to the event and request you to kindly take ahead the session as a moderator. Thank you so much.
Thank you, Ravi. Thanks for the introduction. Welcome all the panelists. Welcome the entire audience over here. So without wasting much of time, I would just want to touch upon a lot of different topics across commercial real estate. So I would like to start the session with opening remarks from Mr. Dhaval Ajmera. If you guys could unmute yourself. So Dhaval bhai, as Ajmera Group, you guys have built some landmark projects in commercial real estate. As a developer, how do you see commercial real estate shaping up in India, probably during COVID-19 or after the lockdown? Just a request to all the panelists, if we could keep our answers within 2 to 3 minutes, it will help so that we could cover all the topics. Thank you, Dhaval bhai, please.
Yeah. Hi. Thank you very much, Anuj. Good evening, everyone, and it's a pleasure to be on this panel with the stalwarts of the industry, with Ramesh, Karthik, and everyone over here. So thank you once again. As a developer, my personal feeling is that commercial real estate and overall, obviously India as such, and I mean the entire India, which has come to a pause today, and which is now quite an acceptable situation, and which we all are going through. I feel it's going to be a little wait and watch mode for the next 2 to 3 months to see how the market is reacting, how the people are reacting, and probably people would be and are under a little I won't say a panic mode, but it's a little scary situation, just to not a scary, but I would say a little anxiety amongst themselves to what the situation is going to lean forward to and how is it going to go through. So there is going to be a lot of wait and watch, but I think overall, if we go to see, it's going to be good. I mean, I personally feel that India has risen much faster and much better in situations like this even before. So like, just to give an example, even though this is like a pandemic situation, whereas if you go in 2008 when the Lehman crisis happened, where the market was really bad, but India really took off quite good, and the market really jumped well, and people, it was a good turnaround, and especially in India, it was a pause even that point in time for 2-3 months, but then eventually it took off quite well. So that way, similarly, I see this situation where where India would definitely come up. And looking at this, I also look at this that there will be a lot of opportunity coming in India, and obviously we hear about industries coming from China to India and other Southeast Asian countries. But being a population, we have the advantage of being such a huge population where the consumption itself becomes our advantage, and then beyond this, I feel production would take place, commercial, and with production, demand would take place, and that's how the commercial asset real estate and residential real estate would come into picture. So overall, I feel it's definitely going to be a great thing. Yes, next 2-3 months will be a wait and watch, but I mean, long term or maybe even short term point, 6 months beyond, I see as a good market what it was earlier for commercial real estate in India before COVID.
Wonderful. I'm very happy that we've started on a very positive note from an outlook perspective. So I would like to have a little bit more macro view from Mr. Neeraj Bansal. Neeraj, you have global experience of working across your US, Europe, Middle East, as well as Southeast Asia. So how do you see the global economic trends impacting the Indian real estate market? See, in my opinion, India will be a key focus in emerging markets, and probably potentially a lot of new business opportunities will also evolve. So do you think that will impact the India commercial real estate segment in any manner?
Sure, thank you for that. Clearly, in terms of the spread of the COVID and the fact that the economies are closed currently, and lockdowns are kind of impacting the currently, Asian region. So they got impacted quite severely in March, which is in some ways a more of a kind of a immediate reaction as well, with the protracted thing that we're seeing from this evolving COVID situation. So since there is more and more clarity emerging in terms of the fact that it will going to be a bit of a prolonged situation, and the business will take certain amount of time to come back to normalcy, which is what is impacting the sentiment and also the requirements part of it as well. So when you look at that from an India context as well, so I think this at India side of it, because of the fact that we've had a most stringent lockdown which has happened. So from our perspective, this is something which is now created a challenge that where the office occupiers, commercial property occupiers have started to write notices and also discuss and negotiate rent-free periods, as well as look at reduction in rentals, also in terms of the in cases where there are more disparate situation in terms of waivers of lock-in periods as well. So that's something which is at the same because of the.
I think Neeraj, there's some issue with your bandwidth. We are not able to hear you, and also now your video is freezing.
Okay. So I'm switching off the video just to kind of save the bandwidth.
I think
is it audible now?
Yes. Please go ahead.
Okay, sure. So I was saying that since the construction activities have also got impacted, and the fact that any offices which were in the near stage of completion would not get the ability to get clearances. So there is both in terms of the demand as well as in terms of the office supply, we would see a certain amount of challenge coming up there. At the same time, it is kind of opening up opportunities for assets to be bought at a more cheaper rates currently, with the fact that there will be some amount of consolidation that we would see in terms of distress sale and PE acquisition as well. So there would be a certain amount of opportunities coming in for number of private equity around it, and we've started to see that in terms of multi-billion-dollar funds getting created, for such kind of assets overall around it. I think there are two other things, which I may say that in the medium term, the fact that the office segment and co-working spaces, would kind of see a bit strongly challenged in terms of the leasing of new office spaces, given that there is a growing acceptance of work, from home, getting more and more done, and the fact that there is, I would say, less experimented method of distributed teamwork, with working from home, which is getting more and more perfected. So that could also impact some of the leasing decisions around it, from a new company's point of view there. So existing occupiers, as they kind of reject their capacity, which they were utilizing, and also the expansion that they were planning. So it basically calls that way from a industry point of view to have a kind of a look at a risk assessment, for their all tenants and the portfolios they have currently on the tenant portfolio side, and also the fact that there will be certain changes in demand and requirements with more and more digitized, more and more sanitation kind of measures, put in place. So how the industry response to that would be something to be seen, and we see that there is a strong focus. So larger players have already come up with their plans and also kind of putting them in place as well. So I think as the situation evolves, one would kind of see that the industry would correct itself and be able to get the positives out of this situation also coming along there. Thank you.
Okay, great. Interesting thoughts from opening remark perspective. So, hello, Mr. Nair. The next question is for you. You are an absolute industry veteran, and I've personally heard you on various webinars you have conducted during this lockdown. So, and I've been following your views very closely. First of all, it will be great to have your opening remarks on the today's topic of commercial real estate outlook in India, and more importantly, how do you see demand shaping up for commercial real estate in these?
Thanks, Anuj. Am I audible?
Yes, please go ahead.
Yeah, Anuj, let's look at the overall commercial market. Even today, we just have 600 million square feet of office space in the country. That's less than what is there in Manhattan, or what's less than Paris, is what India has total. Tokyo alone has 1 billion square feet of office space. Our top 7 cities put together, which has been developing over so many years, still have just 600 million square feet. So that's something we need to keep in mind. Secondly, you look at the market today, the vacancy rates in almost all the markets is in single digits. So the market fundamentals are really good right now, even though I'll talk about COVID impact a little later, but look at the vacancy rates. Today, if someone says, I don't want this space, where do we go to? I'll come to work from home again slightly later. I definitely want to touch on that. There's so much of talk around it. On a lighter note, I don't think Neeraj would have found a job in TCS given the current connection he has at home. There's so much of talk about work from home and people just not looking at the challenges from a data speed to study rooms, to joint families, to firewalls, to data confidentiality, to just imagine two of these large IT companies getting sued by two American banks because somebody was working from home and there was data theft happening, and the billion-dollar lawsuits people will have to go through. We are all sitting in the 5th week. Anuj, I want to ask you the same question 3 months down the line when you're sitting at home. If you really want to work from home for the rest of your life, this is something I've been checking with my colleagues in Europe and China, and everybody actually can't wait to run away from home and get back to offices. And there's so much research today done, whether it's in terms of collaboration, in terms of creativity, in terms of bonding. There's so much of research again on work from home impacting people's morale, impacting motivation, loneliness, anxiety, depression. There's so many issues around it, and we're just forgetting just because the last few weeks we managed to somehow put all these things in place, dongles which don't work, power in many cities, there's still challenges. How am I going to sit on this chair for the rest of my life? I want to sit in a better chair. I need better tables. I need better screens. So there's so many different issues around it. One good thing about Indian real estate office market is a lot of demand comes from multinationals. Close to 70% of the demand today is multinationals. A lot of demand is global in-house centers. These are big banks who want to have their global centers in India. And imagine that out of the Fortune 500 companies, even today, we just have 150 of them who have a presence in India and who are tasted success. We know of international American companies who have crossed 150,000 people in India, employees in India. We know banks who have crossed 40,000, 50,000 people number, and those kind of things are unheard of. And the best thing is the vacancy in the markets. I'm still reasonably bullish. Today, the companies have pressed a pause button on decision making. Our internal research shows that demand this year may drop anywhere between 20 to 30%. This is very, very early estimates. Please don't hold me to it. I may change my prediction 1 month down the line. This is what we are currently seeing. And we have seen across all the downturns, the sector which comes up first in a V shape is always the office sector. And I think the India growth story of India being a great destination for outsourcing, for offshoring, for creating global in-house centers will continue. And we did this research. We spoke to multiple IT services companies, and the typical feeling today is between 5 to 15% of office demand could be work from home. I'll tell you why I'm saying that. With decongestion, everybody wanting to decongest their office spaces because you need to create more social distancing within office space. We believe most companies would look at 35% lesser people in the same amount of space. That's point number one. Secondly, we are not writing off the world economy after this. There would be lots of new sectors which will do well. We all know e-commerce is going to do well. We know OTT companies will do well. Healthcare companies will do well. Pharma companies will do well. There'll be new industries like medical technology, health analytics, So lots of these new industries, FMCG, all these guys are going to do well, and they will need more space. So the space which will be lost because of economic downturn, the space which will be lost to work from home will get compensated by these two trends of decongestion, the de-densification trend, and with companies looking with the newer industries coming up. So I'm overall reasonably bullish. This year will be a little tough, but things will definitely kind of bounce back. We can't look at the top 10 developers in the country. 9 out of the 10 developers in the country are international names today, or somebody who has an international partnership. So why are they coming and investing? And till now, we have just got 6 billion. Last year, Indian FDI was just about $6 billion. Globally, that pool is the 1 trillion, which means we got 0.6% of the global pool. Imagine if the global pools open up. Out of that pool, 35% goes into office, 24% goes into residential, 15% goes into industrial, and 12% goes into malls. But that's a $1 trillion of deals which happen globally, and we just got 6 billion of that. So I think there's still a lot more to go. And we saw it last time also. Demand was around 35 million square feet post 35 or 32 million square feet just before the global financial crisis, went down to 20 million square feet, 32 went to 10, and next year it bounced back to 33 million square feet again. And
mentioning about 2008.
Yeah, 2008-9, and it's kind of stayed in that. The worst year in the last 10 years has been post the global financial crisis. Most years, maybe 1 year it was a little less, but most years it's been more than 27 million square feet. So I think it's robust. There's a great opportunity for HNIs, given that liquidity is becoming a crisis. Liquidity is becoming challenging for developers, especially post IL&FS, post all the NBFC mess. Now with COVID coming in, liquidity will be a challenge, and it's a I think probably the best time for HNIs to start looking at commercial various benefits. On an IRR terms, you could get 13-14% if invested wisely, if you're willing to wait it out, escalations, rent to market rentals, all that stuff, you could get 13-14%. Residential yields today are just 2-3%. Longer leases, typically commercial, there's longer leases compared to residential's shorter leases. We have seen in the last 7 years, we may not see it forward, but at least in the last 7 years, we've seen most commercial markets, capital appreciation actually happening, rental value increase happening between 3 to 7% on a year-on-year basis. And today, the industry is so well outsourced, whether it's in terms of property management, finding tenants, valuations, redoing your buildings, retrofitting your buildings. There's firms like us today who are there to help you support in that journey. So I feel I'm a lot more bullish about commercial than many other asset classes in the country today, and definitely something HNIs should look at. I've met people who own 50 apartments, and my advice to him would be, instead of owning 50 apartments, sell 40 of them and put it in commercial. Retain maybe 10 so that you feel happy, but you can get a lot more returns investing in commercial. So and Anuj, you've seen what happened to mutual funds, right? In the last 1 week, we've been reading all that news around mutual funds, all the mess. No longer mutual fund, not so sahi going forward. I know they spend crores of rupees on the ad campaign, but definitely, you know what's happened. The amount of money investors have lost in the mutual fund sector over the last few months. You've seen the volatility, Black Mondays, Black Fridays, every week it's a black day. And this is perfect time for investors to come back into commercial real estate, especially, and even look at residential if they are looking to stay. And that's something which we don't have industry bodies which actually market the real estate sector in a very proactive way. You look at the mutual fund sector, everybody advertises. We actually thought mutual funds were sahi till the last 2 months when everything became not so sahi. So my request to and I was shocked that I was reading some commentary of some mutual fund experts, and many learned audience in the panels and in the viewers. I've seen predictions of mutual fund gurus saying Sensex will touch black in 50,000. lakh and 50,000. I've seen predictions of 1 lakh. I've seen predictions of 1 lakh 20,000. Here I say real estate will grow 7%, and there'll be 10 people who will question me. But when those mutual fund gurus sit on CNBC channel and say it'll go up 600%, we'll all clap and say, wow, what a visionary. And we know where the mutual fund industry is today, where the Sensex is struggling at 30%. 30,000 when people had made estimates of 1 lakh, 1 lakh 50,000, 70,000, 80,000. So my request to investors is please don't believe blindly because they come in bigger, better television channels than us and maybe wear better clothes than us during those Diwali and wear those nice sherwanis and all that. Please do your homework, listen to advisors, and this is a great time to get into real estate over the next few months.
Great. That was really insightful and absolutely optimistic, I would say, and very happy
I'm
to
being
know that
realistic.
as
I'm
an
being realistic. I'll again say next few months is going to be tough, but things will bounce
yeah.
back. Things will bounce back, and decisions are not getting postponed. Decisions are not getting cancelled. It's only being paused, and companies will come back and look for space. This year there will be a little bit of slowdown, but things will look up again next year.
Yeah, thank you very much. So I would be, because you mentioned about investments, my next question would be to Ankush. Just in the interest of all the participants over here, we are going to cover a lot of topics. I see a lot of questions coming in the chat, and we have already covered that in our panel session. So just stay glued, and you will hear all the answer from the panelists here. So Ankush, you have a unique experience cutting across financial services, fund management, channel partners, and real estate. So, out of all the asset classes in real estate, we have seen that in the last 7 to 9 years, commercial real estate has been the most popular amongst investors. At least I believe that. It will be interesting to have your views on the investor sentiments in the current situation because you deal with a lot of them. And what would you advise them?
So, hi. First of all, good afternoon. I think a great platform. Thanks to the Prop Catalyst team. And thanks to each one of the people who've actually logged in. So, I think it's great to address a great learned set of people. First of all, thank you for the introduction, rightly given. I think I've cut across various industries, and in real estate, I cut across a couple of segments, I must say. One on the research side of business, sales and distribution side of business, I would say mortgage side of business, a lot of things which comes under the paradigm of real estate. Now, if you ask me the sentiments, certainly, I will say under the given situation, I think it's southwards for sure. Everybody's thinking about the current tenants, current large MNCs, what's going to be the next steps, how will the government fiscal policies come into place. A lot of questions are still in minds of a common investor to a large investor, both of them. Now, moving forward, my belief is very strong that real estate will be a synonym of trust and safety. While in the earlier times, whenever you used to ask anybody, I'm talking about from my investor mindset, it used to come in very straight, give me a pre-leased asset which gives me a 8% yield, bank, or any other entity which is a good name to the industry, but never used to come from a perspective of what is the right pricing. That's very important to understand. Today, I think for general public, for people who have actually logged in, it's very important to understand the levels of investment. That's very, very important. One, today, if you ask me, the sentiments go behind two issues. One, the ongoing rentals for a common man, for a retailer coming in, for a retail investor, and for the large people who've actually invested into the commercial space, it goes behind the MNC will stay back, or they will cut down, or the office space will be occupied, or what's going to be my rentals, or there's going to be a force majeure kind of a discussion, or however the case may be. So in my opinion, in the long run, credibility will take place, will actually come into play, most likely from the new instruments which are coming in, REIT, you got the model which you guys are running, the fractional ownership, the PMS. So earlier, if you know the factor that earlier times there was AIS, which was a blind pool. But today, I think it hovers around an identified pool. So today, I think it's time when the customer will start thinking about the right levels, which is important. And between residential and commercial, I have a strong belief that residential will take some more time to get into shape and come into the right platform. While commercial, as rightly mentioned by Mr. Nair, It's going to be a V-turn. Immediately, things will shape up because security is very, very important for every investor today. So I would say advisory to all the people who are back listening to this call. I think all about be it residential, be it commercial, both. The pricing is very important. Not that the returns are important, be it a short return, be it lease guarantees or real-time lease. It's important to know the right level of the property. One, and in fact, there are noble entities in the country which actually give you an unbiased due diligence report. An average investor is about 30 lakh, 40 lakh, 50 lakh, goes up till 30 crores or 50 crores. One should actually go back to these noble entities and get the right pricing reports. That's very important. But that gives you a real-time picture. So that's my advice. And looking forward from a 6 months to a 12 months perspective, I think it's going to be very positive because most of it will move towards commercial than residential. That's my view, Anuj.
Excellent. Thank you. So my next question would be to Mr. Karthik. So Karthik, you are one of the most respected marketing experts in real estate community. We would be keen to understand, see, during or after this pandemic, do you see a market opening up for distressed assets in commercial real estate? And more importantly, do you see that as an opportunity or a threat to investors? Karthik, if you could unmute yourself, please.
Thanks a lot for all the interesting insights so far. It's been very illuminating. I'm going to add a couple of few bits. The way I look at how the distressed opportunities may not exist. Very clearly, one man's distress is another man's opportunity, and there can be no gainsaying the fact that there is going to be distress in the overall real estate market, and it depends upon how various people can sort of tap into that and convert that into an opportunity. So you are going to be on one end of that. So you are going to be on the distress end or on the opportunity end of that. And it depends on how you look at it from that perspective. But to be able to understand how the distressed market opportunities will open up and whether they will open up, how dangerous they are, I think it's sort of important to take two approaches to it. One, and which is sort of what every panelist has been talking about, short term what will happen and long term what will happen. I think short term, my sensing is that distress is going to peak. There are going to be various ways in which the distress will be revealed, and real estate is both an upstream and a downstream recipient of distress. So we are going to see both coming through. But I think it is important to understand that largely the play for retail investors in the short-term distress, I would say to stay away, because it's not something that we can control. Unlike stock markets where you have short-term distress opportunities that you can sort of tap into and make some good money. For real estate, I think it is more important to see how the distress structure sort of opens out in the long run. And for that, I would sort of look at two important things, just to sort of take from what Ramesh was also talking about, how he sees the overall sector sort of on the commercial real estate, going through. And I think that's a very moot point that our penetration of, most things in India is actually very low. So that gives us a great opportunity to believe that, we should be at the receiving end of, good stuff that is happening with us. So on that, for instance, so if I look at the long-term opportunities on the distress side, I will look at two things to sort of understand that. One is that, are there going to be any long-standing consumer changes that are going to happen? And I think that is an important part that we are trying to understand, so that we can sort of cast our business around that. And then, of course, the second thing is the overall economy, not just of India, but the world economy and what impact it has on commercial and other real estate parts. On the consumer behavior part, I think there are going to be pulls and pushes that sort of either increase or decrease the need of consumption of office real estate. I think Ramesh has spoken about the work from home impact, and I think it's too early in life to be able to take a very definitive view. I think like what was being said, just because you sit in few days within the home. You cannot shift your fundamental way of operating businesses. There are some good things. We seem to start most meetings in time. We seem to be finishing more meetings in time. But beyond that, how we are able to engage with consumers, how we are able to sort of take up product services to the market, all those have got very clear implications in the way the overall commercial real estate sort of provides the backbone to it. There is this question that we are trying to answer. I think most companies which have got 300, 400 or more employees and 30,000, 40,000 employees that we are looking at is about de-densification. How are going to be the same number of people going to be operating in the same space? And I think it is going to lead to a lot of implications about scheduling, about in the short run, about scheduling, understanding how handover from one team to another team will happen, how this entire phasing will happen. And I think the other unstated part of it is, my sense is that one part of the de-densification in some way will also lead for the more expensive real estate to be traded down to the less expensive real estate. So, and which could sort of be moving into the semi-commercial districts and the slightly more far off, the newly to be constructed real estate districts, commercial districts. So I think that is definitely going to be something that a lot of us are going to be looking at, that should be trading off expensive real estate to sort of bring down, and because the need for larger real estate actually exists. So your volume is going to increase, the pricing is going to be a question for most of us. And I think the other thing which is an important part is really the question around consolidation versus sort of spreading out your risks even within a country. How the larger corporates are going to relook at consolidation versus handling business BCPs in a better way. So I think people are thinking about it. We are going to see clear thoughts, and of course I don't think most people are going to be happy about relinquishing control of workforce to a large extent. So the need to have controlled work environments is going to be always there. I think one area which we were sort of very focused on, which is really the work area for small and medium-sized enterprises, is another area that we'll need to start looking through. I think it has got implications on the second point, which is really the quality of the economy. India has always taken advantage of crisis. We are good at creating crisis. We are good at sort of coming through crisis also at the same time. And I think I have personally, with whatever understanding that I have a feeling that Indian economy will largely gain out of this. And one of the most important places which it will get reflected upon is definitely real estate. I think as an asset class, it is going to come back into prominence. It already is in various ways, whether you talk about as an investment option in commercial real estate, or about owning your own home, or about multi-purpose homes, and something as not linear as holiday homes as an option against holidays that one normally ends up taking. I think a lot of business models are going to open out as far as real estate and real estate services and real estate service opportunities are concerned. I think the issue is really on the short term. Keynes said that in the long run we're dead. I think we are in a very weird situation. In the long run we are eternal. Short run we just need to survive and find our ways to keep our heads above water.
Thank you, Karthik. So I would want to go to the youngest entrepreneur in the panel session right now, Dr. Ritesh Malik. So Ritesh, I've known you personally for the past 5 years now, and also have been lucky enough to had a chance in investing in your company, Innovate. So I see you as a pioneer in the co-working space in India. And after you started, in last 4 years, we have seen more than 350 co-working organizations crop up, probably more. So to my mind, this segment has been one of the key demand generators for commercial real estate over the last 3 to 4 years. So now, as a category leader in this segment, what is the strategy that is being built from here on in your industry, and do you see the demand still continuing to grow?
So, first of all, thank you very much, Anuj bhai. I think so. Venture Catalyst has been a brilliant supporter in our entrepreneurial endeavor. And when it comes to innovate, I think so. I completely agree with all the panelists with one common emotion: the fact that, and being a medical doctor, I can comment on the fact that people who work from home 24/7 have more depression, to the tune of 25% more depression than people who at least go to their offices more than 3 days a week. So as humans, we are social animals. We are always looking out for community exercises, and offices give us that particular exercise. So I believe work from home will impact hardly 2 to 3% of our business per se. That being said, one permanent change that COVID-19 will lead in terms of our working styles is the fact that I believe that flexibility will become an immediate criteria, where we might see that typical 9 to 5 jobs will shift to things which are more flexible. B, work from home, maybe 15 to 20% of the time of the employee will be a fashion that can be permanent. And the third thing, which I believe will definitely create more and more value for commercial real estate, is the fact that people would now want to have offices near their homes. Gone are the days when people are going from Andheri to Nariman Point. What the company would do is they would tie up with a co-working space which has multiple locations and maybe take 10 to 15 seats in each location. And this is a trend that we have been seeing in the past, even pre-COVID-19. And I think that, and there's another permanent change that will happen in minds of people, in minds of employees. Whenever a crisis comes, one thing which always comes in mind is the fact that, main paisa kyun kama raha hu? If there's no happiness, because this is the question of survival. This is the question of the fact that people are now very worried about their assets. They say कि ज़्यादा पैसा ना आए कोई problem नहीं है, लेकिन FD में at least safe तो है. So I think we will see a lot of emotional decisions being made by people who would now jump onto a lot of certainty in times which are distressful and uncertain. And we will also see, I believe, a massive uptake of co-working in the long term, not in the short term, because we have seen, and co-working business, and you just messaged about force majeure. And this is a very typical topic we can't discuss in media, but this is very interesting because other co-working spaces force majeure nahi denge. 90% of co-working players in the country will get bankrupt within the next 6 months. कहाँ से देंगे इतना पैसा? So I believe that in the short term, definitely the business, the industry has been hit in ways unimaginable. That being said, I think long term में flexible office spaces का जो need है वो बहुत ज़्यादा बढ़ेगा.
Yeah, interesting. So just a follow-on question to that, because you mentioned, so we've seen a lot of co-working spaces in the central business districts. Do you see as a strategy that co-working spaces will also start cropping up near residential or neighborhoods areas to satisfy this culture shift?
I completely agree. And even as a strategy, we have taken a call, and you know this, we've never been there in the BKC as a conscious call, because 400 rupees per square feet nahi padvata. So because we've seen that to build a business, I agree it's very good for your brand. But if you want to build a business which has a 33% EBITDA on center level, you need to be in locations, because in India, even as a brand innovate, we've realized one thing: we are not even able to cater to 15% of the co-working demand because our prices are high. And and that is the reason we have launched another product which is slightly more economical, which and the actual price point which every Indian doesn't mind paying is 6,000 bucks at a decent location. And we've seen that very few, and especially SMEs, early stage entrepreneurs, and in our case, the problem is the customer and consumer are different. My consumer is an employee, whereas my customer is a CEO or a CFO. 90% of the cases, he does not sit out of my office. He sits out of a very plunge office in Nariman Point, whereas his team sits out of my Vikhroli office, and he's very sensitive about costs. So we've realized that irrespective of the location, and that is the reason we've also decreased our capex spends, because we've realized people don't appreciate plush offices. They appreciate value in terms of saving money. If we are able to help companies save money, we will get more business out of them. If we are not able to do that, we will definitely not get business out of them. And one last thing which I believe is that we had struck a lot of revenue share deals, and I believe in the coming future that would decrease, because co-working players have not been able to do justice with the kind of returns that they had promised.
Great. Thank you very much. So next, and just quickly, as I've been getting requests, I would request the panelists to stay a little extended time because we are having a very extended discussion on the overall topic. I have a common question to ask to Mr. Ankussh, Mr. Nair, and Mr. Dhaval. So all of you have been involved in the past in selling of underlying commercial real estate in some form or the manner, either to actual users or probably to investors. Over the years, there have been different models also in which this has been enabled either by fund structure or some or the other structure. What is your take on models like REITs or independent fractional ownership, which is being downstream to investors in smaller ticket sizes? So I would like to start with Ankush just to answer that, and then I'll move on to Mr. Nair.
Yeah, hi. Anuj, I think let's go back to basics first. I think commercial real estate has actually been a very important aspect for every portfolio for sure. Your question asked is very relevant because every investor today is looking at a credible, I would say, platform wherein the money can be managed for sure. Between REIT, between fractional ownership, between PMS. I think from the overall perspective, where one as an investor should look at a 50-50 kind of a model where 50% should be invested into real-time asset, picking up a pre-lease asset with a credible developer. And between that 50%, you can actually bifurcate between an under construction or a developed property. And the balance of 50%, in my opinion, should be blended with the right players, with the right property, at the right pricing. So it's a blend which has to be managed because moving forward, the larger players with the technology coming in, be it the different models of fractional ownership or be the larger players in terms of the fund, I think these people will manage the money very well. The picking up the property becomes more efficient. So in my opinion, it has to be a 50-50 in terms of real-time assets as well as some of these asset classes which are coming up new as a entity. For very importantly, for somebody who's a retail investor from a long-term perspective, I think PMS holds a good option. Fractional ownership holds a good option. And moving forward, blockchain and other technology will also come into play in India. And they will anyway give much more smaller ticket size to actually get into the play. But that's distant at the moment. So for retail investor, the better part is that players like you and other players have actually come into play. And they can get a right property to the investor. That's very important from my perspective.
Okay. So, Mr. Nair, probably if you could share any precedents prevailing in global regions for such kind of models, whether they have been successful, whether there has been acceptability to such kind of new trends, it'll help if you could share your experience.
Sure. Anuj, globally, REIT is a $2 trillion asset class. It's been proven in US, in Europe, in Asia. It has the benefits of both fixed income and equity. It gives the benefits of both. There's a lot more predictable, a lot less volatile. A lot more liquidity in products like this, which are typical challenges in real estate investments. Those are taken care. You have regular dividends and you have a growing rental. Okay, you can catch me saying next 1 year there's not going to be growing rental. Agree. Regulated by SEBI. No tax on dividends. And so there are so many of these benefits. And commercial real estate is a very, very big asset class globally. Like I said, out of that 1 trillion, 35% of it went into commercial deal making, which means last year, $350 billion of commercial real estate assets got traded. So still people like to buy those nice and glass shiny buildings across the world. And that's something which is expected to
Yeah, interesting. So Dhaval, by your 2 cents on this one, so do you see developers benefiting from such kind of products coming out in the market? I saw in the PropCatalyst presentation also, in fact, one of the properties which they have downstreamed has been in Times Square, which is your property.
So, Anuj, I think this is a very good platform, honestly speaking, because what I personally feel as Indians, our DNA lies in having some kind of investments happening, and some kind of and that too into real estate or probably gold or maybe residential or commercial. And it is a known fact that the commercial real estate gives a better return as compared to a residential real estate. So definitely people are more inclined, if there is investment point of view, then definitely people are more inclined towards commercial real estate. So that it makes sense for people to buy in. And then obviously when you get when you have these kind of grade A offices, which are like a larger pool, which is a bigger ticket size, and then if you're like cutting into slices of 10, 20 lakhs, 50 lakhs, or however that ticket size, it makes a it becomes all the more larger pool for them to invest. Because I don't think a person who has a 50 lakh investment cycle, I mean grade, and wants to get now 8-9% return yield would be possible by investing in 50 lakh rupees. So he would have to settle with 50 lakhs to about 4-5% or something like that, and then as a yield, versus a 9%, which is a double yield which is coming in. So I think it's a very good opportunity for investors to invest in REIT and other commercial models like yours.
Thank you.
And definitely it helps developers also, because I see it's a win-win situation for both, because I don't have to go and look into for a one investor who has such a big pool, because those numbers are going to be less, whereas if you have this, I mean the numbers are going to be more, so it becomes an easier transaction and a better opportunity for everybody.
True, true. So Karthik, this actually a lot of our participants today consist of a lot of channel partners as well. So around this, which key factors should a channel partner keep in mind today's time when they are selling commercial real estate? And what do you think will be the new opportunities for the channel partner community in the COVID-19 situation?
I think it's a important question. That's something that we've been trying to talk to channel partners, who work with us, trying to create masterclass for them to ensure that they are able to use this opportunity to learn new tricks, newer things to do, how to sort of organize their business better. And I think one of the interesting outcomes of this current lockdown and COVID-19 is the fact that advice, information, help is actually available for free. It's available when you ask for it. People are more willing to listen. People are more willing to talk. I mean, resources from places like Harvard, etc., are available at the click of a button. So within our organization, literally everyone would be coming out with at least one certification that they otherwise would not have been able to use it. So these are basic things that we are sort of communicating to our channel partners, that they need to use this time, if they are independent channel partners, to sort of get better at their game, understand their consumer better, focus on one thing that they're either very good at or things that are gaps in them, including internet marketing, understanding customer database management, customer negotiations, stuff like that. So there is, treating that as a separate masterclass for each one of them, and then sort of communicating to them. I think one of the important things that we believe at a larger level is that professional services are going to become more and more important to be able to play in the real estate field going forward, because you need to be able to sift through what could be potentially dangerous versus what is potentially high opportunity. And I think when you sort of expand that definition to a larger extent, I think a significant proportion of base of those professional services to the retail consumer actually comes from the large, channel partner network that exists almost in every city. And I think that is an area where people have to become sharper, use this time to create more connect with the consumers, talk to their existing consumers, find out the sort of troubles or problems that they are having, try and protect the sales that they've already done and not got their brokerages for, to ensure that, in once the lockdown opens up and the collections start coming in, they get their monies for the work which is already done. So there's a lot of work that I believe channel partners can be doing at this point of time, and also start preparing for more organization of their businesses. Many opportunities are going to open up. I think the retail opportunities for commercial real estate can be one big opportunity that some of the larger channel partners can definitely focus on, helping and enabling what probably PropCatalyst would be doing at an individual retail customer, and sort of pushing that could be another opportunity. I think large amount of movement on rental deals, and a huge amount of churn that is possible on both rental and sales are areas for brokers, because this increase in transactions during distressed times can actually increase, and you have to play the volume game at that point in time.
Yes, great. So I'm coming to one interesting point. Now, this is with respect to जो फोर्स मेजोर या रेंट अबेटमेंट जो अभी काफी लोग मांग रहे हैं. इन द पैनल वी हैव वन एंटरप्रेन्योर, वी हैव वन डेवलपर, एंड आल्सो वी हैव मिस्टर रमेश नायर हु is from JLL. Ritesh has already given his point of view कि force majeure तो enable करना ही पड़ेगा, rent abatement भी enable करना पड़ेगा. I would like to understand from Mr. Ramesh what is the perspective he is seeing in the market being taken from this particular point, and are people actually enabling it? What is your view and what is your advice?
So there are views on both sides. Both sides have their pros and cons in terms of arguments. Our take on this is a force majeure clause is dependent on how you have worded that contract, that particular clause. Nobody used to look at those two clauses, the force majeure and rent abatement. This would be the last clause, maybe out of the 70, 80 clauses which one would look at. Today, everybody is looking at it. I think it's based on that particular clause, how that clause is worded, and it kind of varies between people. So every contract has a different force majeure clause. So if you have put all these points in, then you should go and argue with the landlord. But if it's not there, then tough luck.
Yeah. Dhaval, how are you seeing this being enabled? Because you hold a lot of commercial real estate.
So we've, been contemplating and, speaking about it, and I've been discussing with other developers also. So there has been two views to it. View number one has been that wherever there are servers which are working of their companies within the premises and it's been on 24/7, then there is no, people are not waiving off the rent because premises is on, services are on, back services are on. So all that keeps on going. But in places where such things are not important, or servers are not on, everything is come to a standstill. It is more on a personal and one-to-one relationship where you take care and then probably decide on what you need to do. But practically, my personal view, we need to come to a midway solution where you are not completely taking the burn, nor is the tenant taking the burn. It is somewhere you both share it together, because it's not something which is happened it's not something which has happened because of any one of our reasons. It's like a natural thing and we have to accept it. It's a world over pandemic, so something which we need to share together, and that's more or less accepted. And probably I personally, wherever I would probably just look like this and take it forward as a mutually acceptable norm with all my tenants and customers.
Okay, so we all should see for a longer term relationship and try and build
Absolutely.
that with our tenants. Yeah, very interesting. So Neeraj, your 2 cents on this, and then we'll move to the FAQ session for the overall participants.
So simply speaking, one was a business perspective, that the developers and the tenants both are in a relationship, and the fact that they need a continuity as well. So from a business continuity, also the fact that they are looking at a larger thing to come in a subsequent times. So one would see that there is a relationship aspect of it, which will come to see that how they come up with a mutually acceptable solution. But if you look at it from a like what Ramesh also mentioned, that there is a way that how it's kind of been worded. But if simply put, the obligations under commercial agreements will have to get complied with. As the current present situation that we are facing is a temporary in nature, it's not a permanent nature, and also it doesn't result in the fact that you cannot perform the duty at all, right, in terms of use of the premises and other aspects of it. And in the past also, including the Supreme Court has held that the fact that there has become a hardship that you cannot pay the rent because of the economic situation around it, so to make it more onerous or there will be a more loss coming in there, does not entitle the basically the next party to kind of say that they can avoid an obligation. So that is the, let's say, a perspective given the way the laws have been, the way the court verdicts have happened around it. So what would happen essentially is that the ones which have a pandemic situation worded in their force majeure, and that situation is not excluded, they would be having a better stance on this one. And of course, when the courts are looking at it, they would also take certain amount of expectation into consideration as well in terms of the situation, because it is certainly impacting everyone. But I would put it this way, that there is a legal view and there is a business view. Business view would certainly prevail in the current circumstances, that that in continuity of relationship, in the fact that there is a genuine issue which is being faced. So they, instead of force majeure, there will be other clauses under which and other ways in which the settlement can be achieved on this part there.
I think I had a lot of more questions to ask, but in the interest of time, we will quickly take a few FAQs which have come. Ravi, can I request you to take it from here? These FAQs will be answered by the the panelist as well as founder of PropCatalyst if there are questions for them as well. So Ravi, please request you to take it from you.
Thank you so much, Anuj. And before I go into the Q&A, I would like to take this moment to thank all the panelists, Mr. Karthik, Rajaram, Mr. Dhaval, Ajmera, Ritesh Malik, and everyone. It was a wonderful, wonderful session. We have a lot of questions. I'll start one by one. Give me a second. First question which is coming up: as an investor, what should be my criteria to filter down new investments and percentage of my investment? How should I divide it among various asset class and segment? Request the panelists, if you'd like to take up, just let us know.
I think the question was not clear. If you could just repeat that question.
Sure. Apologies. Let me repeat the question again.
Sure.
As an investor, what should be my criteria to filter down new investments and percentage of my investments? How should I divide it amongst various asset classes and segments?
Okay. In case you want, I'll take this question up. Actually, I would certainly say, as a thumb rule for investments. Again, it all depends, one, on the age you're investing in. So it's great to actually start investing at the very early stages in various formats. But I would say, looking at the time you're investing and the risk appetite, this portfolio needs to be designed. But in my opinion, while we are passing through this situation, moving forward, my view is that anything which is into commercial real estate, the first criteria to look at is the right product, one. The kind of investments you have. So in case you want to possess a complete asset, or you want to go the fractional way or the other way, you have to look at it. But for commercial asset, I think whatever investments are done till date, I think that needs to be doubled up for sure. Obviously, there has to be a blend, as I mentioned in the earlier question, that it has to be a 50-50 between the asset in physical format and the other format. So, in my opinion, I think the investments in commercial real estate needs to double up. In other asset classes, we need to look at the underlying security, which is very important. Long-term, a fixed yield-based kind of investment into mutual fund is very important. So, moving forward, I think the security part of it needs to be considered. And every asset class, be it a mutual funds, be it insurance, be it a real estate, whether commercial or residential, I think the security part needs to be taken care of very carefully, because I think this situation has actually made us learn a lot of things for sure in terms of security, and people who've invested into the underdeveloped product, I think moving forward, the consideration is very simple: to go with the developer and not look at the pricing for per se, because again, commercial asset different altogether, because thing is a different aspect altogether. So commercial, let's not look at the pricing, let's look at the capability of the developer to develop it and lease it out. That's very important. So
Thanks a
from
lot.
my perspective, these all aspects needs to be taken care of.
Thank you so much, Ankussh. Really appreciate your answer. My next question is to Mr. Nair. This question has been received by one of our participants. The question is coming from Mr. Baljit Kohli. Mr. Nair, the question is, with the pandemic, most building design would require workstation distance, ventilation. It would also require, social distancing. How do we make them COVID friendly? All these, so how does this changes affect the space utility in commercial real estate? Mr. Nair, if you can answer that question, please.
Yeah, very good question, Daljit. So there is going to be massive design changes going forward. It's going to be tough to change all the spaces now because it's going to cost more. I think the two biggest changes that will happen is in terms of spacing between desks. We believe there is going to be that new 2 meter rule, not rule which is going to go, but at least the companies will try and see how they can maintain a 1.5 to 2 meter, which reduces the utilization rate. So good question. It is going to reduce the utilization rate. The other big point, one is social distancing within offices. We spoke about how it can decongest and look at designs. The second big aspect about design is going to be air circulation. That's going to be a lot more. There's going to be a lot more focus on air circulation, air ventilation, air filtration. There are going to be air filtration standards which will come from the government. All this is required to give that comfort to employees. It's the massive amount of changes which will happen. We were thinking of, we actually have a walking track in our existing office in Mumbai. If we can put arrow marks around so that everybody walks in one direction, like a clockwise direction, so that you don't come face to face with people. We currently have a lot of desks where people face each other. So we're looking at ways if we can change the design in such a way that people are not facing each other. The other big design changes which will come is it was there previously, and over the last few years, because collaboration became the key element, putting those big dividers between two desks, having those 6 feet dividers. So there are multiple things which can happen. Furniture companies also need to sell new themes. So there'll be a good amount of design changes which will happen.
Thank you so much, Mr. Nair. I think that was wonderful. Thank you so much. Appreciate it. Mr. Baljit Singh, I hope that answers the question. The next question is for Ritesh Malik. Ritesh, we have this question coming in from Akshay. It's a two-part question. Number one, a lot of hotels are going into asset-light model. How would this play out post COVID-19? And you have been pioneer of started one of the first co-working in the country. So co-working, as we all know, sharing space. But post COVID-19 is going to be changed. So what would be your take onto this, Ritesh?
So I completely agree with Mr. Nair. I think one thing which will definitely happen is that there's a very interesting thing. So we were pressurized to fill in as many people as possible. Earlier we used to hear about the fact that 100 square feet needs to be given to one particular person. Now, when you see that we are giving hardly 35 to 36 square feet per person and in a particular co-working space on carpet. So I believe that this will definitely change. We will not see 100% occupancies. We will see companies advocating in their employees to come with 50% occupancies, and a lot of new furniture equipment will be used to make sure that existing capex is converted into COVID-friendly spaces.
Thanks a lot, Ritesh. Thank you so much. Appreciate that. We'll take the next question. This question is for Aniket Bharadia. Aniket?
Yes.
All right, wonderful. Aniket, the question is, how can we associate with PropCatalyst? Is there any distribution model available?
Hello, hi. So yeah, PropCatalyst does believe in having channel partners, and you can reach out through us, or you can reach out to us through our websites or through our contacts on LinkedIn, and we will guide you further on this. But yeah, we do look for channel partners. We believe that growth should happen from everyone, not in a single way.
Thanks a lot, Aniket. The next question is for Karthik. Karthik, the question for you would be, I think commercial space market will be slow for the next year and a half. After that, we will see boom in this segment. This question is from SKG. What is your take on that, Karthik?
Sorry. Can you just please repeat it?
Yes, definitely. This question is coming. I think the commercial space market will be slow for the next year and a half, and after that, there would be a boom in this segment. Do you agree to this point, and do you also want to share your thoughts on this?
I think that's sort of what everybody has been speaking about. I think people are saying that there is going to be distress in the short run, but in the long run, we are all hopeful on this thing. But I think largely also because of the amount of liquidity that governments across the world are sort of pump priming into the economy. How it pans out, we will have to see. And I think we continue to be hopeful that commercial real estate will form a fairly significant part of the overall investment of many investors.
Thanks a lot, Karthik. Appreciate that. The next question is coming in from Abhishek Malpani. The question is, if you can please throw some light on the Mumbai real estate market. If I can request
Mr. Ajmera.
Yeah, Mr. Ajmera to kindly answer this question. That'll be really helpful. One second, I need to unmute you. Just allow me a second. Yeah. Please go ahead.
As I told you, the real estate market, I feel personally, India is, fundamentally, there is a lot of requirement for housing. There's a lot of requirement for, but there's a big demand for housing. It's going to be housing for all, as our Prime Minister has always been saying. So real estate demand is going to be there. While the residential moves, there is definitely going to be a movement for commercial, because people can only buy residential if their businesses are going good. And if their businesses go good is only when, they will have offices and they have trades and they have business and manufacturing units. So I think overall, I feel market in real estate is going to be better. And in India, there's definitely, as I've been saying earlier, would be a pause moment for the next 3 to 6 months. But overall, I still feel it will be a great opportunity coming forward, and people will come up and look at this, because I also feel one more thing, that one thing which has really happened in this pandemic time is that people have realized that the only asset which has helped all of them, all of us, I would say, rather, during this pandemic time is their own homes, or where they have a shelter to live through, and they have the shelter to go through this time. So I think that has been a biggest realization for everybody. So, and that's where I feel will be a bigger opportunity for people to now look at real estate in a very, very serious way, specifically with the millennials, because they always have a thing of moving around places with just on rental model. But I think owning an asset will become the topmost priority for everybody, and be it home, be it office, be it a warehousing, or be it anything, retail or whatever. But real estate will become the number one priority for anyone in their investment going forward.
Thank you so much, Mr. Ajmera. That was very, very insightful. The next question is for Neeraj. Neeraj, the question is, to boost supply as well as demand, do you have any thoughts on packages or relief measure that should be announced by the government in the current situation, or something which they have already announced? If you can share some insights on that, Neeraj. Thank you.
Neeraj, if I can add up a follow-up question, how do you think India is placed in front of the other Asian countries in terms of companies coming out here to India?
Sure. So on the first one, clearly in terms of the economic activity boost is required, and the government has currently, with the measures announced by RBI and also the measures announced by the Finance Ministry, there is a certain amount of relief has come for the industry, and more so in terms of the customers of the industry there. Having said that, I mean, there is a lot more to be done, with the fact that the measures that were announced were for initially for 3 months of moratorium, aspect of it, and potentially there's a definite need to be extending, those moratorium for a longer duration, and also from a tax perspective, there would be need for giving more relief and concessions, there. And additionally, in terms of the fact that the economic activity itself would need a boost there from the business side. So the while some of the sectors in terms of the e-commerce, consumer goods company, and in terms of healthcare, pharma, chemicals, those sectors would tend to be positive given the requirements and consumption which is happening currently. But these sectors which are getting impacted today more, including technology sector, there would be relief requirement which is required there in that. And I think to the point which Aniket, you mentioned on it, in terms of the how India is placed, certainly India is quite well placed, from the perspective of the Make in India initiative and many other aspects that the government has launched, since some time. Having said that, the in terms of the because the U.S.-China trade war has been there for more than a year now, and the fact that there have been many companies which had decided to move, given the fact that they had exposure to the U.S. market with their exports and other arrangements they had with the EU as well. So there has been the fact that Vietnam and Thailand particularly have been more preferred destination given their infrastructure, given the government packages that were announced specifically for it. What the government needs to do will be, and we will see that also because there are a number of discussions which have been on, and even yesterday, the chief minister discussion as well, the prime minister also emphasized, on that aspect of it, and then chief ministers have also many states have already come and spoken about it a bit there. So there is a need for a definite measures and packages to be considered to be able to attract a certain set of companies to India, and that would mean a strong concerted effort to be launched, as well in that, because currently we've got Thailand has got a Thailand Plus package offer. They've got an Eastern Economic Corridor set up around it. Vietnam has being proximate to China and a very well established industrial zones as well there to the north of Vietnam. So they tend to have a number of companies, from a attractiveness point of view, placed over there. We have to certainly compete. But it's a great opportunity for India to get its rightful share in terms of the distribution on the supply chain side of it. But these are also, I would put it this way, lastly, that these are very long-term activities. So some of these would not happen in the next 3 months, 4 months point of view. While there may be talks, there may be discussions around it, but some of these activities require a lot more discussion, a lot more evaluation in terms of how the customers are looking at things, how the ecosystem is coming up with suppliers and the vendors, part of it as well, supply of materials as well. So wherever we are naturally poised because of the availability of material, availability of the customer base, and the favorable FTA agreements, there we should put much more emphasis around that.
Thank you so much, Neeraj. Appreciate your deep insights on that. That was really helpful. Ankush, we would take the last question, which we have curated from the audience, and after this, we would have 2 live questions coming in from the live audience as well, because a lot of people have requested for. So the next question goes to you, Ankush. What are the pros and cons of rental yielding assets?
Okay, the pros and cons for rental yielding asset is again the quality of asset, which is very important. It all originates from that key factor. I think I'm audible, right? Sure. So I think it all depends on the asset completely. One, on the placement of the asset, the way it has been sold, through which advisor it's been sold, and the tenant. So these are some of the factors which actually drive a particular product in the commercial real estate space. I would say cons again are basically 2 different sides of the coin. I think all depends on situation which is currently prevailing at the moment, while we are actually forced to see the force majeure clause and etc. etc. So these are I would say unthoughtful situations. One, but overall I would say as a commercial asset, I think it all depends on how the development is done, how it's leased out, which are the consultants and the brokers and the advisors which are actually taking it further. And so overall, I think it's all about the development, planning, and execution of the product, which is very important from my perspective.
Thanks a lot, Ankush. Appreciate that. And now we would take two last questions. Before I do that, apologies for all the panelists that we have already extended the time, but we have a lot of questions coming in, but we'll try and wrap up as soon as possible. So we have quick two questions coming in. The first question is coming in from Pareen Detroja. Let me see if Pareen is able to speak. Pareen, you can go ahead and ask a question. I have given you access to ask a question.
Yeah. So my question is, so one part of the commercial real estate which is limited and not so much booming in India, like very few players are there, is the exhibitions space, which is there in Mumbai and in a couple of places in Delhi. So how would exhibitions as a business continue? Like, would electronic media replace exhibitions, or would the exhibitions, which is currently in the current form, would continue?
Thanks a lot. And do you want any panelists to answer this specifically?
So, like, I would like to know, and in terms of panelist, any panelist, but I'm more specific in the Mumbai's real exhibition center, which there are two players majorly. One is Nesco, and the other one is the in the BKC. There's a big park.
Thanks a
owned
lot.
by Reliance.
Thanks a lot. If I can request Mr. Ajmera to answer that question. So the question is, there are a lot of commercial exhibition spaces in Mumbai and Delhi. What is going to happen with these commercial spaces? Would they go to online, or would there be a lot of changes required into those commercial spaces? Mr. Ajmera.
I personally feel, when a person is coming to these kind of commercial exhibitions, they are coming up with a particular mindset. And for any person who's coming with a particular mindset, it is very important for them to focus and have that kind of a attention. So which you can only get when you are probably at a space or a place where you are. So I personally believe, I don't think this will go. Commercial exhibition centers will not go, but it will definitely stay at maybe big cities, and probably like tier 1 cities, and cities with a higher population, and not particular to tier 2 tier 3 cities for now. But my personal view is that if you being at home and doing an online show or an online exhibition or something, it can give your focus, your attention to only to a little span, but not to for you to take a business decision or something like that. So for which you personally need to be there, because that's where you're more focused or attentive at.
Thank you so much, Ajmera. Appreciate your insights on this. We'll take the last question for the day from Abhinav.
Just to add, I think, add on the question.
Sure.
Just to add to this factor, because it touch base Delhi, and though I'm managing international business for a respected company, but I hail out of North India. So my answer to this is very simple. It all depends on the nature of the exhibition, which is very important. So I think the economy is changing from a lot of perspectives. I think healthcare services, different services, which will be taking a step forward, wherein there are other industries which do not get more impetus on the online bit, are essentials. So again, the answer is that it all depends on the nature of the exhibition. Still, the focus for these kind of exhibitions will prevail for sure, because it's a very noble kind of a perspective and a customer-driven kind of a perspective. So answer is yes, it will prevail, but it depends on the nature of the business of the exhibition, actually, from my perspective.
Ankush, thanks a lot.
Thank
And
you.
I have a follow-up question coming in from Ankur Khurana, especially for you. The question is, if you can share some suggestions or inputs, what should be the approach to reach new commercial clients post-COVID-19?
Okay, I would again take myself to the background I hail from. So I've been a B2B and a B2C guy, a business to a business and business to a customer. While I've worked with developers and worked with larger entities, funds, etc., etc. So post-COVID, I think the only thing which will be the underlining factor will be the knowledge-driven approach. Second of all, I think the entire country is working on technology. Correct. So, in my opinion, a right product, which will be a blend, which will be sold to people, and B2C and B2B will have a 50-50% share. Though fact of the matter is that India and most of the developed countries are oriented by B2B, right? If you see US, you will see Australia and larger developed countries, they are all driven by B2B, a business to a business, and they dominate the market. Larger players like Remax, Century 21, etc., etc. I think, in my perspective, and I think larger organizations will sustain, and it is only the customer's knowledge perspective which will give an edge. Whether it comes from a broker, it comes from a direct company, it comes from a manufacturer, knowledge and technology will be the way forward. And I think it's a disruptive thing which will be taken care of.
Thank you so much, Ankussh. Appreciate that. I think that was a wonderful, wonderful event. Thank you so much, all the panelists. And I would like to request Arpit Parakh to come here. Arpit is the co-founder at PropCatalyst to share the thank you note. Before Arpit come, I would like to give a quick background about Arpit. Prior to this, he's currently handling fractional ownership in real estate. Prior to this, he was handling his family business at Walford Properties, a leading real estate firm in Chhattisgarh. Arpit is a civil engineer and pursued his education from NIT. Further, he pursued his post-graduation from SPJIMR. He's passionate about exploring new places and he's a travel enthusiast. Arpit, request you to kindly come and share thank you note and closing note.
Oh, thank you, Ravi. Hello, everyone. I am Arpit Parakh, co-founder at PropCatalyst. We at PropCatalyst would like to thank our phenomenal panelists who took out their valuable time to share such insights of the industry post-COVID. I would also like to thank our co-partners and a wonderful audience for their engaging interaction throughout the session. I hope the takeaways from today's session helps in better understanding of the real estate industry. Looking forward to host more such informative sessions. Stay home, stay safe. Thank you.
Thank you. Thank you very much.
Thank you so much, Arpit. Thank you all the panelists.
Thanks. Thank you so much.
Bye-bye.
Thank you. Bye-bye. Cheers.